Options trading looks like the fast track to wealth, but that's exactly where most people get burned. What Wall Street Trapper is laying out here is the reality. If you don't understand risk, you're not trading, you're gambling. This isn't about scaring you away, it's about giving you the knowledge to protect your money. Pay close attention. The truth about losing in options is the first step to actually learning how to win. Let's check this clip out.
I'll be honest with you, I never cared about a break even. That goes against all option philosophy. I never cared about a break even because I never played this game to break even. The one thing that I can guarantee you is you're going to lose some money. How much money you lose is on you. How much money you lose is on you.
Well, I hear you say a lot of times that going into a play, you should know your entry, your exit, your break even and all that stuff, right? So my question to you is, what's the formula to determine that? Because I've been doing well so far. Like I jumped in around April, May, I went all in. If you remember, I called in around May telling you that I was a government employee and I pretty much let Doge do what they do and take that job. And so I'm all in on options. I'm all in on investing in stocks, and I'm doing pretty well actually. Doing pretty well actually. But I want to level up, and I know, and I hear the OG say in the Patreon all the time that when you enter into a play, you should know your break even, you should know your exit, you should know the stop losses and all that good stuff. And I haven't quite figured out how to determine that, or what's the formula for that.
She's so chill, you heard me?
Yep.
I'm gonna tell you something. She wanted to say that number so bad. She wanted to flex on that job. Yeah? All right, so let's get into it. Let me answer that question. Let's answer that. Man, y'all got some good questions tonight. I like when y'all have these type of questions because it just allows me to Steve did something the other day that was real fire. I was talking and he said, Cam, you better record Trap cause Steve asked me a question. I just went in. Me, him, and Markel, and he was just like, boy, you better record him right here. It's just it's something about answering a question that's in depth that allows you to just pull it, right? So the question is, Trap, how do I set my break evens? How do I set my exits and entries when it comes to the options game? That's the first part of the question. So let me answer that. I'll be honest with you, I never cared about a break even. That goes against all option philosophy. I never cared about a break even because I never played this game to break even. I never cared about a break even. But what I will tell you is when it comes to a loss, when it comes to your exit, so you should have three things when you enter an option play. One is the entry. At what price am I entering this option play? But to add on to that, you gotta ask yourself, why am I entering this option play? So one, what is the catalyst that's making you say, this is a play that I wanna enter? What is it? Why? Second, your entry price. So there's a couple ways you can get your entry price. Your entry price can, one, be based on the formula that's in the options masterclass, or two, based on some type of technical analysis. So I'll get into a little bit of the technical analysis part because you already have the options masterclass. The technical analysis part can be so many different ways, but I'll give you my way based on market structure trading, right? So for me, a lot of times I want to see when I'm getting into play, one, I want to see it coming off of a retest where the buyers are now overtaking the sellers. If you notice in the Patreon, a lot of my calls that we get in, especially since June, well, probably since July has been, if you look at the chart of it, is when buyers have now taken over the sellers. Meaning the lower high that has been created has now effectively overtaken that higher high, or when buyers have beat out sellers, or when I get what's called an outside bar, right? So an outside bar, or you can say it's almost like a engulfing candle. It's when the green candle that follows the red candle has opened and closed higher. Opened, the green candle has now overtaken that red candle, which means the buyers have now overtaken the sellers. But that also has to be in position where it has now created a higher high, or is going into that higher high. I never want to make an entry when it is going in a lower low, because now I'm trading in the downtrend. Now again, because we buy time on our plays, you may think, all right, Trap, well, I'm buying time, I can stretch it out. Well, that always don't work in your favor, because now what happens is you got to spend a lot of mental energy overcoming the loss, right? You're spending a lot of energy now wanting it to hit a price to get you back green, instead of, getting it in a better price, which is considered typically a higher probability, right? So you want to get in a trade where more of the odds are in your favor, right? So that, again, you can't never make up for a tweet or the market just one day just selling off on something you in. You can't make up for that, right? But the goal is to get in a play when the play has overtaken a retest or of confirmation. The next thing is, another way for me is, and I'll be honest with you, is when my play has fallen, but it has entered a demand zone. So a demand zone, that's why I say there's a few ways you can get into a play. It just depends on what method you're using. So another way for me to make an entry inside of a play is when it hits my demand zone. Because demand zone means that there is a lot of buyers right there ready to get this price and get back in the market right here, right? The third way for me is off of a gap. So I know that off a gap that there may be buyers waiting, and it doesn't always have to fill the whole gap, but y'all know the stat, 76% of the time gaps get filled. Not all gaps, 76% of the time. Meaning a stock can run up when it gaps up. When a stock gaps up, that means there's a whole bunch of buyers that orders did not get taken. So when the market runs up, it has to come back and do what? Go get that stash. It wants to get some of that stash. So those are the three ways that I like to get in position. Now, when it comes to exits can be difficult, but it shouldn't be. Exits can happen a few ways. One, you can put your exit at, hey, if this stock runs up and then it comes back down and breaks this lower low, what we talked about, if it breaks the lower low on the downside, then you know for a fact it has now officially saluted and told us we want to be in a downtrend. Once the market has told us that it wants to be in a downtrend, it behooves us to pay attention. It does not work in our favor to put our bias on the market because we are in a play. If we are in a play and the market says, nope, I'm going down. If you strategically see it going down day by day It's on you to say, it is now broken this neck, I am getting out. It's okay to let it break the neck. You get out, watch it fall. You can play puts if you want. Watch it fall and then say, it is now reversed. How do we know we see a reversal? Either you're gonna see a hammer at the bottom of a downtrend tells you reversal. A hangman at the top of an uptrend tells you reversal. A gravestone doji tells you reversal. So you need to learn your reversal candles. They are going to help you a lot. You learn your reversal candles and learn strategically where they are placed at. Again, in an uptrend, if you see a hangman, it's a good chance there's a reversal coming. In a downtrend, you see that hammer, it's a good chance there's a reversal coming. So if you learn your reversals, you know, okay, it don't mean it, but if I get confirmation with that next candle being what? Red or green, you know, this where we going at. So we can pay attention to things like that. Now we understand how to exit. Another way to exit can be, hey, if this stock, so for me, I have a tolerance that is kind of high. So I am willing to let my play go deeper in the red than others, right? But don't use that as a handicap to hold on to losers. Don't use, because you got high risk tolerance, as a level, a reason for you to hold on to a loser. The worst thing that can happen to a trader is their ego turn a small loss to a complete loss. You don't want to turn a small loss to a complete loss. The one thing that I can guarantee you is you're going to lose some money. How much money you lose is on you. How much money you lose is on you. And the more you start to identify these things, the better you get at that. So I never cared about a break even. Some people probably gonna crucify me because I don't care about a break even. They're gonna say I don't know what the hell I'm talking about because I don't know. I don't really care. I'm not in this game to break even. I'm in this game to make some money.
Start stacking today. Join Coinbase with my link in the description and get free Bitcoin just for signing up. Don't wait.